Yeah, my firm, we were fixed fee. We were totally virtual. We could work anywhere, clients anywhere. And and that made a huge difference for us in terms of just our costs, right? Our profit margin was so much higher because we didn't have all this overhead of a physical office. And I imagine that makes these virtual subscription firms more valuable than the traditional ones.
They do. And when we're talking about valuation, I think just for context, there are a lot of factors that play into value, as you might imagine. And we like to think of it in terms of like number of potential buyers.
Mm,
So if you have a lot of buyers, you're going to get a higher price, higher valuation, probably better terms at closing than if you have very few buyers in the marketplace for your practice. So when you look at, like, one of the main factors is location. So if you have a traditional brick and mortar firm and you're in a rural location, let's say, you might have very few buyers because very few people want to move to wherever that practice is and live in that community. So location becomes a big factor in valuation. And you look at the virtual model or the cloud model, and your market for is really nationwide. We sell cloud firms from people all over the country. So
so give me an idea of what you're talking about. If I am brick and mortar, how many buyers might I have versus if I'm virtual?
well, it's not uncommon for us when we market a cloud firm to have a couple of hundred inquiries. And in a major metropolitan area, we might have 50 or 60 inquiries on a nice firm.
Got it.
And then in a rural area, sometimes we're lucky if we have 10 inquiries,
Hmm.
if it's very rural. And there are other things that definitely play into it: cash flow to owner, the mix of services, your fee quality, your owner dependency, how many hours the owner works in the practice, your growth trajectory. So we look at all of those things. And so it is difficult to isolate a single factor and say, okay, this factor is going to have a 30% increase in valuation. Or you kind of have to look, and every practice is different. There's varying factors that you have to kind of consider them all together.
Yeah. So it's not as simple as I would like it to be, where we could just say, you bill hourly, it's, this multiple, you bill subscription, it's this multiple.
I
All
don't think
all
it's, yeah.
all other things held the same?
I,
Is there
I
a way to
wish I
isolate it?
could, yeah, I wish I could isolate it. I mean, like, it's so hard. I could have two exact firms and those things might be different, but there might be some other variables that are
Mm,
so, there's just so much. And I will say, like, I see so much variation in how firms are built. Like the business model can be so different. The profit margins can be so different. People say, well, what's the average profitability of a practice? And my answer is, like, do you really want to go for average? Because it's not very good.
what,
So
tell me, now I gotta know what is average.
well, it depends on the size of the practice too. Like
Yeah.
what tends to happen is your profitability is going to be naturally higher when you're small, single owner. The owner's doing a lot of their production. When you hire and you scale up, and the owner production becomes less of the driving force of the practice, then the margin tends to
Yeah.
come down as the practice grows.